Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here today with a Forex Market Analysis for you on February the 5th, 2020. And real quick, let's just show you our disclaimer to remind you that this video is for illustrative purposes only. And with that, we're going to jump to our live screen, and we already have the Forex-Trading-Unlocked.com website pulled up with the workstation page already pulled up from the menu bar. We're going to go past our economic numbers for today and news and numbers. We're going to just go right into the meat and potatoes of everything. So we have the Euro US dollar chart up right now. And as you can see, the Euro is significantly lower from yesterday's trading. Definitely has a quite the range, which the past week and a half has brought some very large volatility back into the Euro US dollar. We haven't had ranges or swings like this in quite some time. So it's very interesting to see how the dollar is gaining strength. And just to give you a little perspective real quick as to what I mean about the dollar gaining strength, we're going to take a look at this real quick. So as you can see, the dollar index is making a run back for higher move highs. It set a higher move low 2 sessions back, or did it? The question is this is a higher move high up here at 98 194, and from 2 sessions ago we set this low around 97 345. Now if you notice, this is obviously in the longer term trend that is up right now. This is another higher move low. However, if you look at the last higher move low from here, it actually took that out. So the question is this a higher move low in the grand scheme of this uptrend, or is this a lower move low after a higher move high setting up for a failure below this 98 194? Right now, with the way the markets are shaping up, it appears to be that the bull is holding true in the dollar index. So let's go back to the Euro US dollar real quick, so you can see what we're talking about as far as the relationship. Now remember, the euro and the pound are both the biggest weights in the dollar index. Both of them are lower today. And right now, as you can see, the euro is hard pressed on support, right on this upward sloping support line that has been keeping the uptrend intact for months. Now this market has been making a series of lower move lows and lower move highs, which is indicative of what? A fundamental bear market. So we're going to go with that right now. We had a rejection a few sessions back after that balloon underwater rally. It fell right back here, and 3 sessions later we're pressing right below or right above the last higher move low. So the question is will support hold in this area, or is it going to explode back to the upside? As you can see, the market is actually wedging in this nice little triangle right here. We're pressing on the bottom part of support right now. If we get through this upward sloping blue line here, we'll be laying on this downside target, first initial target of $1.0979. Any failure from here is going to have us breaking almost another dollar down towards $100.0875. A failure from this pivot point right here is a very negative indication that this bearish trend is going to continue for quite some time. Remember that the dollar index has been in a rally the whole month of January and into February. There's a lot of reasons why the dollar is strong right now. Most of it is the coronavirus. There's also fundamental reasons and technical reasons for the euro to continue to be a bear right now. However, the biggest thing is most likely the coronavirus fears. So we've looked at one of the first major markets versus the US dollar. Now let's go to the British pound and see how this is turning out. The British pound, what a wedge sideways trade this has been. Now, we have been talking since December about expecting a sideways trade into Brexit, and we got it. And then here it looked like last week on Friday, we got this nice breakout to the upside. And boy, did it seem like we were going to get a move. Well, then this week happened, and now we've settled. We went from making a higher move high, starting to bust out towards the upper end of this channel that this market's been going sideways in, to falling back to taking out these lows by just a hair and not getting underneath this key pivot here at $1.2902. So any failure from this $1.2902 will have us targeting $1.2744. Remember that this market has been in a bull market for quite some time versus the dollar. This goes all the way back to the summertime. Now it has been basing and just slowly grinding higher for the past few months as we've headed into Brexit. And now with a lot of uncertainty, it's doing the same right now. However, I think that since the euro is falling apart versus the dollar, the pound has a little bit more strength. Give you an indication of what I mean here. Let's take a look at the euro pound. So we first looked at the euro. Now we're looking at the pound, the other big weight. this market's been trending lower and sideways. So there's not very much strength when it comes to the euro versus the pound. So that means that the British pound, US dollar, is pretty much the strongest heavyweight versus the dollar. But as a whole, it's been going sideways, and I think that you have a better chance of seeing another bounce here and more sideways action with the potential breach of this upside pivot here at $1.3204, which then targets $1.3394. So a little bit of a mixed review here. I think range traders who had a great month of January, and I was calling for that one all month. It's a tough trade, so if you know how to trade the tight ranges, you were doing well for a month. And it looked like we were going to break out of this little thing. And I think, as you can see, the volatility and volume has definitely started to spike a little bit. So we are gearing for a breakout. Which way it's going to go, who knows? So I think right now you got to be pretty neutral, trading the range, and then waiting for a breakout to get a confirmation of a new trend move. Obviously, a breakout of this $1.3204 would have us making higher move highs, showing that the bulls have the strength. Also, once it starts to make higher move highs and getting above this first little breakout area, then we have a good chance at taking out this high that we had set back in December. But look at the range here. As you can see, like except for the extreme spike of the high and then when it fell off the low, the British pound has been just winding in a very narrow range trade. So this is something to be mindful of. And like I said, right now it looks like the range traders are still holding up and taking care of business while the directional bulls and bears are just getting chopped up. So good luck with it today. And like I said, be mindful of those pivots and key off of that. Don't expect any major moves. Now here's one that is an interesting trade as far as the European currency cross rates. It's the US dollar Swiss. The Swiss is a bull against so many currencies and has been for a while. The question is it going to hold itself? Well, the coronavirus and the problems with the EU, I think, are starting to impact the Swiss versus the dollar. Now you got to remember that this market's been in a bear market since November, excuse me, the end of November, and has bottomed in the middle of January. Now, whereas the dollar has rallied versus most currencies, you can see that as far as on the year, the U.S. dollar Swiss is only slightly higher. So it's been very choppy. Now the question is it going to break out to the upside, or is it going to fall apart and continue to break? Well, I think that as far as the European currencies go, it's just like how the pound is starting to go sideways and is pretty strong against the dollar. The Swiss is a flight to quality currency, which it still will remain to be so. But right now, we have made higher move highs, higher move low, and now we're hovering right below higher move highs. So with US dollar strength being what it is right now, unless the bulls run out of gas and the dollar falls apart, which I don't think it's going to, because fundamentally right now you have the biggest issue with the coronavirus. So with that, we'll see how these things shape up over the next couple of days, but the numbers have been exploding. So there's a flight to quality, dollar and Swiss being that. And if you take a look at, for instance, this gives you another indication of euro strength and weakness. We'll pull up the euro Swiss. So now the Swiss, as you can see, here's another one. Now this one's been trending for much longer as a bear. So the euro definitely doesn't have strength when it comes to European currencies. So when you look at the Swiss, remember and be mindful that this has been a bull, and even though the other currencies may be falling against the dollar in Europe, this one's not going to fall as fast. So we're looking for probably some really wild neutral swings to lower. So I think we're going to continue to, when the dollar shows weakness, you're going to see a major sell-off in the Swiss very quickly. And then when you have, for instance, like today, we have the impeachment trial that is coming to a close. We had the State of the Union address yesterday, and we have the coronavirus, all of which are impacting the dollar today. So until this afternoon, when the U.S. markets close, I don't think you're going to have so much of a variable on the other cross rates versus the dollar. It's going to be the dollar that's wagging the dog right now. So we'll see how this manifests. But right now, we just looked at the top three European currencies versus the dollar. The pound, the euro, and the Swiss are all lower. So now let's get back to our trade zone. It was announced in the State of the Union address yesterday about the new NAFTA accord, or the new trade agreement that is taking over NAFTA between the U.S., Canada, and Mexico. U.S. dollar has been in a nice uptrend versus the Canadian dollar for quite some time now, since the end of December. But look at this, it's been really in a grinding lower trade for months. And for the most part, actually, it's been trading from where it's just a little bit higher from where it is now down to right where we have just above this lower pivot here at $1.31.18. So let's get this chart over here a little bit, make it a little bit easier to see. Okay, so we have a wide range of pivots here. This is an accelerated slope for this rally. This is because of the coronavirus and the fact that when it comes to being able to handle things like that, now like obviously Canada is an industrialized nation. It's not that they don't have the healthcare and the ability to take care of coronavirus. However, it does have a greater impact on their trades on the trade zone, and as far as if it's going to be in the North American countries between U.S. dollar or Mexico, the U.S. and Canada, the U.S. should probably be the stronger of the three currencies because of what's going on right now with the coronavirus, which is a fundamental variable that is definitely driving, or well, we can't say for sure, but most likely it is the biggest driver of the current trend right now. Because otherwise the US dollar would most likely be falling on support than rallying like it has been the last, especially the continuation, because we've been in an uptrend with the dollar now since the beginning of the year. So we're looking for a breach of this $1.3329 pivot. Any trading above here takes us off that long-term bearish to neutral trade to now becoming neutral to even potentially bullish. Remember, if this coronavirus, if you think about the math, if we're where China was a couple months ago, then that means in a couple weeks we'll be where China was just a week ago. So, and those are not good numbers. Hopefully that is not going to be the case. But should that be the case, it's very likely that you'll see this U.S. dollar Canada. We're right now in the beginning of February, but by the middle of March, the end of April, we might see the U.S. dollar Canada up at $1.35, $1.36. So that could be a very big continuation of this trend. So right now we're looking for a correction, for an opportunity possibly to buy or to see if the dollar makes a turn. But right now it doesn't seem like that's happening. Now there is one, of all the markets in the world that's gaining strength versus the dollar, there's always a counter trend trade. Look at this, the US dollar Mexican peso trade. I guess they really want to make spring break expensive for Americans coming up in the next couple months for the college kids. So, because here, if you look at this trend, the US dollar versus the peso has been trending lower, not just for months, but literally for the past couple of years. But it held pretty strong around the 19 and a half, 19 peso level for a while. Now, not so. Now we're actually in a very bearish market. And here we had made a low at the beginning of the month, in January, had a nice rally, made a higher move low, and then here it was the failure a couple sessions back. We made a lower move high, this pivot at 18.94 pesos to the dollar. That's our upward breakout level. We don't see it really happening right now. Right now it seems that the dollar may be strong, like we looked at the European currencies and even versus the Canadian dollar. But when it comes to the Mexican peso, not so much. For whatever reason it is, there's other fundamentals, not technicals, that are driving this bear. Think about it. We just looked at 4 major currency cross rates. This is a much lesser currency cross rate versus the dollar, and the dollar's weak. So you never know. There's always a bull somewhere. There's always a bear somewhere. And sometimes you think like you can't just ride the dollar index trade. That's why you use the dollar index as one of your indicators, especially with some of your major currencies when they're in motion. But when it comes to all of them as a whole, sometimes they do ride all in one direction, but not always. There's a lot of currencies in the dollar index, Mexican peso being one of them. So now that we looked at those, now let's go over and look at, keep spinning around the world. We started out in Europe, we went to North America, and now we are over in Asia. So now we look at the US dollar Japanese yen trade. Boom, we had a nice buy signal yesterday. You do not see this one very often. Okay, so for those of you that are familiar with Japanese candlestick patterns, yesterday completed a 3 inside up pattern. So this low, see how this market trend, we corrected off of this new higher move high when we broke out to the upside. We slid all the way down here until 3 sessions ago where we just planted this lower move low. And look at the volatility on this one. It's negative, 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 negative. Only 2 slightly positive days in a period of 2.5 weeks. Now, within a period of 3 sessions this week, on Monday, we had contained at the lower end of the range for Friday's trade, and then settled positive, which that was our first signal right here, this bar right here. That would have been our Harami buy. Then this one here, yesterday's trading, that led to another signal. So Harami is the first symbol or symbolic pattern that is a medium range pattern. It's not always successful, but a lot of times when you've been trending either up or down, and then you have a contained smaller range day where it's at the upper or lower end, in this case the lower end of the range for the bearish slide, that's called a Harami after the close. So that indicates a potential short-term, not necessarily trend change, but stop in trend. So that put it on neutral. So that meant we were looking for a sideways to slightly higher corrective move right off of that trade, with the support line being the key for risk. That's the low that was set. So that'd be $1.08, 108.32. So this is definitely our key downside pivot. If the US dollar yen falls back below here, that would be very bearish for this market. Now, the US dollar yen has been in a bullish market versus the US dollar has been in the bull versus the yen for quite some time. So the trend with that, even when the dollar index was lower, was that this market was going higher. So when dollar strength is exuded, this market explodes to the upside like it did over the past 3 sessions, especially yesterday. When the dollar is weaker, it doesn't seem to sell off as strong in this market like it does in the other ones. So we had our Harami buy signal that was completed on Monday. We had yesterday on Tuesday, we had our 3 inside up day, which is, and now usually this second positive day close is like somewhere up around the upper part of the, like what would be Friday of the low bar day. Usually you do not see an exacerbated rally like this. This is extremely bullish momentum. You can see the market pull back a little bit overnight, but boom, it's higher. And it's going to most likely momentum is going to maintain that way as now we're pressing. This is the area where we had major resistance for quite some time in this market. If you look at this area right here, we're trading right at that. See how I highlighted this line here? We're right at that resistance pivot. And you know how it was buffering. Remember how we made this higher move low here and exploded above it? Well, now we came above it today. We're pressing this through this area. We're most likely going to grind higher and take out this $10.31 pivot right here. We have a long range target for the US dollar yen at around 112 even to 112 half. Now this is something that most likely will take another month to manifest, but who knows right now with the way the coronavirus is going. Remember, the yen is the one currency, flight to quality currency in Asia. However, versus the dollar, it still isn't. So no matter what, the dollar has the strength, it has the upper hand, and most likely the trend will continue higher. Now, not so for some of the other currencies that are in the Asiatic trade zone. Australian dollar, US dollar also is trying to make a bottom. It set a low last Friday, and yesterday actually, plotted new lows, and now boom, had a nice turnaround because of the way the profit taking came in. Remember, dollar strength was prevalent the past couple of days. Not so here. We started out Monday, calm trade. Yesterday spiked a little bit lower, and then boom, and then today here we prodded higher move highs. So the question is this a correction? Is this truly a bottoming formation that we have here? I mean, the overall trend for this market was a bull. However, with the virus and with the fires in Australia, I would say that unless you take out the 68.79 pivot here, this last swing high, odds are this is a corrective rally that's going to fail somewhere. Where? Don't exactly know. It's hard to get a range on this one because dollar is strong versus major currency crosses. This, like I said, I think is more of a profit-taking thing and a little calm before the next break. If the market is symmetrical, you can see when the market came off the higher move highs that was the top of this trend and became a bear, we slid down this first wave lower. We corrected up to here. It's not that wide. It's about, let's see, that would put us right here where we are here today. It's pretty much symmetrical with this corrective move here. If the velocity of this bearish move lower is maintained, it's very likely that sometime today, or maybe it may have already done it today. Today may be the high, and then we're going to fall back on support. Now, if we take out 66.79, do not try and fade this. This market isn't a bearish trend. The velocity of this break is pretty strong. So that's why we're looking at this as a little pause right now. But the overall trend is bearish. There's so many fundamentals that are not helping out the Australian dollar, US dollar. So I think that when you get moments of strength, it's going to be corrective moves until we have a clearer idea of what's going to happen. Remember, as this virus grows in China and around the world, it's impacting definitely that trade zone. It really has an impact on Australia, not to mention the wildfires that have been just decimating the continent. The Australians, we definitely hope that things start to subside for them because they surely need a break. And then we have also in the same trade zone, we had the New Zealand dollar, US dollar, which bottomed yesterday as well. And today it's weak. So we have, as you can see, except for the US dollar, Mexican peso, and one other currency, this one here, it's not doing so well either, you know. Whereas the Australian dollar is getting a little relief, this market, it may be doing the same thing. I mean, today it's lower. This is a hard gauge. We were long-term bulls on this for a while until the virus started to kick in. This gap right here off this where this pivot here is at 66.30. Until we get above here, which the market was in an overall long-term bull trend and a nice move. This was originally looked at as a corrective slide in January until this virus really started to kick in. The question is how much of a corrective rally can this market get? If it fails here at the 64.47 area, most likely this thing's going to keep tumbling down to the 63 half, 63 even level. The overall trend right now for the New Zealand dollar, US dollar, just like the Australian dollar, US dollar, is a bear. Anything right now that we're looking to the upside is just a correction unless we have a major turn of events for the US dollar. So now we're going to take a look at another currency, one of the lesser currency crosses versus the dollar, but definitely one that does have an impact. The US dollar, Turkish lira. Now this one has been hovering just below a breakout here and higher move highs at, what is it, 598.85. And now today we're pressing new move highs. Slowly, it's a grind, but it's a bull. Any slide in this market right now is looked at only as a potential buying opportunity and a correction. Now, obviously, we're just hovering at the highs here. We came off this higher move low here and have been trending for the past few weeks. This has been riding the dollar bull. The dollar is a bull right now, and I think this is one of your currencies, especially because of where it's located in the world, is in between China and the Middle East, and we don't know what's going on in that area of the world as far as how well they can contain the movement of certain people where this virus can spread. Obviously, with the populations there and also with a lot of the strife in that zone, the Turkish lira is one of the flight to quality currencies in that area of the world. However, versus the dollar right now, especially because of the fundamentals that are driving everything, and some of the other things that are going on in the Middle East, which is Turkey's not in the Middle East, but it's still on the edge of it, and that still is impacted by what's going on there. So I think that because of a lot of geopolitical things that are going on in the region, also with what's going on with the EU, and which is borders Turkey as well, there's a lot of issues that just give the US dollar, it's all kind of like an easy bull, even if the dollar is not strong. This is like kind of like the Japanese yen. No matter what, this trend most likely is going to remain. So any break in this market is looked at as a buying opportunity. So since we've looked around the world at all these currencies, let's go back to where we started at the Euro US dollar. We've seen that the dollar is really under pressure, but right now you can see that now it's just hovering. The US markets have been open for a while now, and I think everyone's digesting and talking about the State of the Union and a lot of the things that were discussed yesterday, and seeing what's the reaction with Congress and stuff, and then also dealing with the remainder of the impeachment trial. So we have a lot of fundamentals in the marketplace right now. Technicals, it's tough. We like to fuse them both to find trading opportunities, but right now it's really, really hard because we don't typically have medical fundamentals like we have like this going on in our global environment. It seems like the markets are starting to absorb things, but the reality is that the more this does increase, the likelihood of a slowdown come the third and fourth quarters around the globe, maybe not in the US, but definitely around the globe because of the impact on China, The funny thing is, like, we had an admission yesterday from the Chinese government about their failure to react to this new medical outbreak as quickly and as properly as they probably should have. That's was quite astounding to me to hear an apology from a bunch of communists. That's something you don't normally hear. But that also kind of coincides with the fact that where most of the world is not naive and has been thinking that they've been understating their numbers. Obviously, that's the most truthful thing we're going to get as far as clarity. Just to remind you, the numbers last Friday were just over 8,000, and then yesterday we had peaked over 20,000 for the coronavirus. That's an incredible amount of escalation in cases right now. So we know that it's not waning yet. It's still waxing, and hopefully this trend will subside. But right now it looks like that because of the growth in that the US dollar is definitely going to hold strength. Now remember, even if we take out the fundamental aspect of this trade, we have this downside target of $1.0875. Well, here's the nice thing about this. For all you technical traders out here, remember that we had taken out this little, oops, that's the wrong, sorry about that, that's the nice thing about this. We're doing it live, but we can fix it really quickly. So here is our little trend line here. And as you can see, that this here is the neck, here's your head, here's your last shoulder. When we took out this support line here, boom, we are waving down. We've got our first break here, corrective move higher with our lower move high. Boom, we take out that low in this neckline. We make this lower move low. We've corrected to make a lower move high. So this would be wave 1, 2, 3, 4, and now we are proceeding towards maybe making new lows. Should we take out the support $1.0979? Remember, we have a downside target of $1.0875. The reason we have that target is because the failure from this neckline here targets right around that 108.75. So for us to get a slide that still brings the market down for at least another half a dollar to a buck, there's a technical target down there from the head and shoulders. So that goes with the fundamentals. Now, always do we get a target from a head and shoulders that hits? Absolutely not. However, we did get the break. The head and shoulders was confirmed, and now we're laying on support. So where's our most likely objective? Let's go with the downside target from the head and shoulders. Remember, the euro US dollar, no matter how much you pound on this currency, and no matter what's going on in the world, it seems to find support around the 108.5 to 109 area, and then it boom, not like it's going to go up to $1.20, but it has the likelihood of coming back up to where it's at now, or even up to around $1.12 versus the dollar. With the fundamental thing that's going on now with the virus, then we have the stuff that's going on in Italy, then we also have the Brexit that has already occurred. There's so many fundamentals that are weak the euro in general, or cause the euro weakness. Remember, we looked at the Swiss versus the euro, the pound versus the euro. This market is a bear, so we'll look for every rally to be a correction right now. Let's ride the support trade. Only if we get a breach of this last lower move high at $1.1095 does it take us off the bearish train for a short-term rally that targets 111.88. The only thing I can see that would get us to swing high back up towards here, take out the swing high, and then continue to that higher target level would be a very big turn of events in the US dollar. Right now, it doesn't seem like that's anything like, I don't know what would happen to cause that. Right now, I think you have to go with the fundamentals and the technicals that are driving this break and continue to look at this for another lower move low. So your risk to the downside as a bear is this $1.1095. Anything above there puts us off the bearish path. But remember, we are not a bull for this market at all. Don't try and catch a falling knife unless you find a really valid buy signal, which we're going to look for once we get down to this 108.75. I think right now, momentum is your friend. You keep on going with that, and that's the deal that you just have to ride and go with. Now, we looked at those currencies. We talked about a lot of different patterns and what's going on, technicals and fundamentals. Remember, we had the one buy signal with that huge 3 inside up pattern. And if you want to learn more about that, you can read the book High Probable Japanese Candlestick Patterns. And if you want to know where you can find it, all you got to do is be on our website at forex-trading-unlocked.com, and on every page at the bottom we have high probable Japanese candlestick patterns where you can, well, you could buy it, you can share it, or you can preview it. So you can see if it's worth reading, and if it is, you can purchase it on Amazon in either Kindle or paperback version, and learn more how to execute the highest probable Japanese candlestick patterns that work in the Forex markets, the futures markets, all markets that are tradable. These patterns work in. You just have to follow the rules properly, and you'll see. So we covered one of the patterns today, the 3 inside up. We're going to see how that manifests over the next few days, and you can learn more about that pattern. Okay, so with that, good luck with your trading today. Remember, there's a lot of digestion in the markets today because of what happened with the State of the Union in the U.S. and obviously the coronavirus, and we want to see what the reaction is from the global community about the State of the Union and the direction and plans that the President of the United States has for our country moving forward over the course of the next few months as we go into the elections and into 2020. So with that, thank you very much for your time, and always check us out at www.forex-trading-unlocked.com, and also subscribe to our YouTube channel so you can get notified when our videos come out streaming live, as well as our lessons that we put out for the trading community as well. With that, you have a good trading day, and we will